the government is always trying to ping pong between two things. Inflation, where we're going to be destroying the dollar, we're going to be destroying the purchasing power of your currency wherever you are, or they're going to be trying to keep the economy running. And you can't usually have both. It's kind of like whack-a-mole. Real estate is basic human right? Everybody needs it. Everybody is going to move into it. And it's kind of a funny thing because, sorry about all the noise in the background. It's kind of a funny thing because if everybody drives a car, it doesn't mean that they're automatically a mechanic, does it? But if everybody has a home or an apartment, now all of a sudden they feel they're a real estate expert. So, there's people that study for 10, 20 years about real estate, and it is an art. So it's kind of a tough thing. Every time you get a new client, you kind of have to start over at the beginning. But I can tell you what is happening this year. The government is always trying to ping pong between two things. Inflation, where we're going to be destroying the dollar. We're going to be destroying the purchasing power of your currency wherever you are. Or they're going to be trying to keep the economy running. And you can't usually have both. It's kind of like whack-a-mole. Whatever the problem is of the day, they're going to hit it with a sledgehammer. So when COVID happened and people needed money really, really badly, all of a sudden they're going to take it and they're going to give out money to people, give out money to companies. But this is going to keep the economy going, but it's going to come at a cost. Deal with the devil kind of thing. So you're going to have to pay for that later. And that's what we're doing now. We're paying for it. All the money that we got before. The bill came due. So now the government is very aggressively hitting all of this inflation by raising interest rates to crazy prices. Okay, so remember, every 1% the interest rate goes up, you're going to take away 10% of the price of the home. So imagine when you live in a country that has hundreds of millions of homes. Imagine losing 10% of all of them. Remember, during the recession, they printed, depends on your country, United States was, 15 trillion or something, like tons. Canada, I think, printed 750 billion. Anyway, the numbers are so big. What does it matter? The point is that's going to create massive, massive inflation. And so now that they're hitting inflation, it's going to hurt the economy. And you can't have both things at the same time. So the US Fed today is going to make their announcement. And they're going to declare whether or not they're in a recession. Of course they're in a stinking recession. They were in a recession in the first 3 months. And Biden came out this week and says, we're going to change the way that we define what a recession is. I mean, that is absolute lunacy. We have to be smarter and look past the words that people are using. That's what we have to do. This is down by the waterfront. This property right here is one of the most underrated properties, I think. It's over on Stadium Boulevard. It's right next to the marina. No one ever talks about this place. Anyway, changing the term of recession, people just look at the recession and CPI, which is backward facing. We're always wanting to know what is going to happen. Best way to look at what's going to happen is look at the producers index. That tells you what the prices will be in the future. Don't look at the consumer price index because that's heavily manipulated. So when they raise those rates, they're going to be pulling those trillions of dollars out of the market. And remember, money just doesn't disappear. It's not burned. What actually happens is it just transfers from one person to the next. Like if you have a gold bar in your pocket and you have to pay it away, you lost it, but someone else gained it. So the economy is going to have all the money that was printed taken away from you. This is the marina that it's nearby, this 38 stadium. Now there's several buildings, but these buildings are all right on the marina. I love this place. If you look, you can actually go in the gates and there's several condos on each side. It doesn't have a lot of amenities, so the prices are actually low. So the Fed is going to raise the rates today, and in Canada, we have to copy the States almost always. We're tied at the hip, we produce stuff. We produce a lot of stuff. We're an export country and we're tied at the hip to the States. So 90% of the time, whatever happens in the States will happen in Canada. So if the US raises their interest rate by 1%, you should expect Canada to raise it like 1% as well. If that happens, all home prices will drop by 10% as well. Now, that is a very bold statement across the board, but remember, the higher the price of the home, the larger it will drop. So if you have a $10 million home, it's going to drop more than 10%. But if you have a very low priced entry home, that price is not going to drop probably at all. And the reason is everyone's willing to downsize in tough times, but no one's willing to move out of their city into a new country, a new place. So in Canada, people are moving to Alberta because it has no provincial tax. In the United States, people are going to no tax states as well, down in Tennessee, Florida, Texas, Arizona, Nevada, places like that. So you're going to see, as the squeeze is put on people and more taxes are taken out, more and more inflation, they're going to be flooding into these low tax states. But remember, whenever you look at that, the government has to get their money from somewhere, so they're going to be using property taxes to subsidize themselves. So make sure that you are going to look at the property taxes on your homes. Anyway, that's it for me today. If you like this stuff, just subscribe to it. Sending it to even one person, that's going to help.